Welcome to the Deep Dive. Today we're plunging into, well, a really fascinating collision of investment ideas, actually.
Yeah, it's quite the contrast.
All thanks to the perspectives you, our listener, shared with us. We've got buzz from younger investors around a meme coin called SPX6900.
Right.
And then on the other side, more traditional investors really applauding Coinbase, the crypto exchange joining the S&P 500, the big leagues.
It really is like watching two different financial worlds unfold at the same time. And these topics, they seem worlds apart, don't they?
Totally.
But looking at them together gives us this really interesting glimpse into how investing is evolving.
So our mission today is to really get under the hood of these viewpoints, figure out what's driving the excitement, on both sides.
And see if it's more than just apples and oranges, or maybe understand why it's apples and oranges.
Exactly. So let's start with $6900. What's the spark here? I mean, the name itself, it feels like an inside joke, maybe a bit confusing if you're not in that world.
Well, that's kind of the point, I think. What's really interesting is the idea behind it. So SPX $6,900 isn't just some random token. It's deliberately designed as a mimification of the actual S&P 500 index.
Okay, memification.
Yeah, think of it like it's how digital natives are commenting on this very established financial thing. One source called it decentralized ownership of the narrative.
Decentralized ownership of the narrative. Okay, let's unpack that. It's more than just a funny name, though.
Right, it goes deeper.
One commentary we looked at mentioned this thesis from someone named Murad, saying meme coins are the purest distillation of digital attention and collective belief.
Yeah, that's a key idea here.
He even called SPX $6,900 financial performance art, driven by vibes, virality, and velocity. That sounds very different from PE ratios.
It's a world away, isn't it? And that's the crux. It signals a potential shift in what some investors, especially younger ones, actually value. So instead of just looking at a company's balance sheet, the focus shifts to things like, is it culturally relevant? How fast can this idea spread online? The shared buzz it creates.
That memetic energy term they used.
Exactly, memetic energy. It's about finding that connection, that community, rallying around an idea. It suggests that maybe social capital, these shared stories, are becoming assets themselves.
Challenging traditional value metrics.
Totally.
So where does something like this even trade? I mean, you're not seeing SPX $6,900 next to Apple on your Schwab account, right?
Definitely not. The excitement around SPX $6,900 is really tied to decentralized exchanges, or DXs.
Like Uniswap, SushiSwap, those names we hear?
Precisely. Uniswap, SushiSwap Base is another one. The big draw is what they call permissionless peer-to-peer freedom.
Okay.
So for anyone unfamiliar, DXs let you trade crypto directly with others. There's no central company in the middle like a traditional brokerage.
No sign-up process, just connect your wallet and go.
Basically, yeah, it's direct interaction, which really fits that whole decentralized ethos.
And there was this point about transparency, too. The community seems big on the fact that you can see all the transactions on the blockchain.
Yeah, using tools like Etherscan.
The argument being this is more transparent than, say, Wall Street with its quarterly reports and SEC filings, which can feel a bit opaque sometimes.
That's a really interesting take on transparency, isn't it? On-chain data gives you this real-time, unchangeable record of who holds what, the trades, even the code itself. It's just a very different kind of openness compared to the regulated periodic disclosures from public companies, different philosophies.
It's fascinating how they frame SPX $6,900. Like a memetic derivative, a way for younger investors to, talk back to the old guard.
Exactly, like using internet culture to engage with, maybe even poke fun at the established financial system.
Yeah.
There's this sense of democratizing finance a bit, taking ownership, injecting some playful rebellion into a world that can feel pretty serious and exclusive.
A way for a generation that maybe feels a bit left out by traditional finance to create their own thing.
Create their own instruments, their own online communities, yeah.
And apparently, there's more to SPX $6,900 than just the meme aspect. We saw mentions of community governance.
Right, DAOs.
Deflationary tokenomics, no pre-mine for VCs, and even a specific APY for staking, like 42%.
Yeah, these features sound like they're trying to build something more lasting, maybe encourage holding beyond just the initial hype.
Despite the jokey name.
Right.
Yeah.
So deflationary tokenomics usually means things like burning tokens with transactions, trying to reduce supply over time, make it scarcer.
Okay.
And the rapid rise of DAOs, decentralized autonomous organizations in that community, points to this drive for community control. Very different from a typical corporate structure.
Much faster, potentially.
Potentially, yeah. And that 42% APY you mentioned, I mean, that sounds incredibly high, or it does.
And it's important to remember, returns like that usually come with massive risk.
Yeah.
The mechanics behind them can be complex, maybe not sustainable long-term. Definitely something to be aware of. Okay, got it. So that's a dive into the SPX $6,900 world. Now let's completely switch gears.
Right.
Let's look at the other side. The traditional investors cheering Coinbase, joining the S&P 500. What's the big deal here?
Well, the feeling here is really about mainstream acceptance, validation, integration.
Okay.
It's seen as this major step, bringing the crypto world, or at least a big piece of it, right into the heart of the established stock market.
And the S&P 500, I mean, that's the benchmark. It's full of companies everyone knows.
Exactly. Your Apples, Microsofts, Amazons, Google, Meta, Netflix, Nike, you name it.
Companies, as one source pointed out, that you probably interact with every single day. Your phone, your shopping, your streaming.
Precisely. And the traditional argument is that investing in an S&P 500 index fund gives you broad diversification across all these leading companies, different sectors.
Spreading the risk.
Right. Historically, it's seen as a pretty reliable, if maybe slower, way to tap into innovation and economic growth.
And now, with Coinbase in there.
Now, if you hold that index fund, you indirectly get exposure to the performance of a major player in the crypto ecosystem. It links those worlds.
There's also a lot of talk about the S&P 500's track record. You know, those historical long-term average returns. Around 10% a year, give or take.
Yeah, that's the classic pitch. A dependable way to build wealth over time. Which, let's be honest, is a very different story from the kind of volatility you see in crypto.
Huge difference.
So the S&P 500 gets positioned as, stable, powerful, offering that compound power from investing in actual businesses, making actual revenue.
A more traditional path to potential returns.
Right.
Less roller coaster-like.
Generally, yes. Though no investment is without risk, of course.
One of the commentaries we saw even kind of acknowledged the perception of the S&P 500 being maybe boomer safe or something, but argued that adding Coinbase makes it way more relevant for digital natives. Like a signal, maybe.
That's a great way to frame it. It signals that the traditional financial world is paying serious attention to digital assets now. It's evolving.
The S&P 500 isn't static.
Right. And that advice we saw, take some crypto gains, put them in the S&P 500, it's not about abandoning crypto.
It's diversification.
Exactly. Diversifying into something maybe more established, potentially less volatile. It's framed as buying in to the broader financial picture, not selling out.
Okay, so we have these two seemingly really different scenes playing out. SPX $6,900 on one side, S&P 500 plus Coinbase on the other. Are they just totally separate universes? Or are there overlaps, connections?
That's really the million-dollar question, isn't it? I mean, on the surface, the philosophies driving them feel worlds apart.
Yeah.
You've got investing in established companies with revenue streams versus participating in what feels more like a digital cultural movement.
Tracking fundamentals versus tracking vibes and mimetic energy.
Right. Different metrics, completely different expectations about how quickly you might see returns, and definitely different ideas about risk.
And the views on middlemen and transparency are just poles apart.
Totally. Traditional investors work through regulated brokers, rely on official filings. The SPX $6,900 crowd champions direct DX trading and points to that real-time on-chain data as the ultimate transparency.
Very different definitions.
Absolutely. And the timelines. I mean, crypto folks often look for, or at least hope for, those huge rapid gains and accept the risk of equally rapid losses.
Right. Short time horizon sometimes.
While the S&P 500 is usually pitched as the long game, steady accumulation over years, decades even.
But it's important to say both sides see value and opportunity.
Yeah.
Yeah. They're just defining it and chasing it in really different ways.
Precisely. Neither way is inherently right or wrong. They just reflect different views of the financial world today, different comfort levels with risk, and honestly, different bets on where value and community are headed in this digital age.
Okay, so just to kind of wrap our heads around this, we've got the established S&P 500 world now sort of embracing crypto via Coinbase, showing this growing link between traditional finance and digital assets.
Yeah, convergence happening there.
Yeah, and at the very same time, you have this new wave championing meme coins like SPX $6,900, using them as cultural commentary, a totally new way to engage with markets.
We've looked at the key features, the core ideas behind both. One rooted in, established financial principles, company performance.
And the other.
Grounded in the fast-moving, sometimes chaotic world of digital culture, community power, and decentralized tech.
Which leads us to a final thought for you, the listener, to chew on. As we see more of this integration, digital assets like crypto becoming part of traditional finance, like with Coinbase and the S&P 500, how might that ultimately shape these culture coins?
Yeah. What's the future impact?
Will it change how they evolve? Or how people participate in markets generally? Is something like SPX6900 just a flash in the pan, a fleeting meme? Or does it actually represent something more fundamental about how value and community get built online now?
Big questions.